Tesla just got some really bad news. Tesla stock price targets, earnings, Cybertruck, and news. Hey there fellow investors and tech enthusiasts, welcome back to another exciting episode of our YouTube channel. Today's discussion revolves around Tesla's TSLA stock, and we'll be examining 3 articles. The first is titled Tesla Q3 Earnings, Even Worse Than Expected, where we'll scrutinize their earnings results, the author's viewpoint, my perspective on their reaction, and the sharp decline in share price. I believe this is an exaggerated response to an earnings report that wasn't as negative as portrayed. Following that, we'll delve into an article titled Tesla Stock Target Prices Revised After Disappointing Q3 Earnings. This delves into the adjustments made by investors, institutions, and analysts in their price targets and predictions for Tesla stock. We'll assess whether these alterations are justified, and I'll also provide my own personal price target. Finally, we'll discuss a somewhat overlooked news story about BMW joining the Tesla trend with their charging network, specifically the NACS charging ports, which we'll cover in more detail later in this video. This development is indeed promising. We'll briefly touch on the Cybertruck, along with Tesla's artificial intelligence capabilities. I'll also share my educated perspective on where I believe this company is headed in the future. For those who hold Tesla stock and want more updates, let me know in the comments below. Additionally, you can become a channel member for as little as 99 cents to support me and receive more videos like this. With that said, let's dive into today's stories. It's worth noting that Tesla is not only an electric vehicle manufacturer, but also heavily involved in energy generation and storage. Furthermore, Tesla Inc., under the ticker symbol TSLA, recently unveiled their Q3 quarterly figures in their earnings report. To be frank, the earnings report isn't as dire as it may seem, a point we'll explore in detail. Investors are currently exhibiting an exaggerated reaction to Tesla's recent performance. Historically, Tesla has demonstrated impressive Q3 production numbers and metrics, surpassing other quarters and even surpassing analyst estimates on average. This boost in Q3 numbers can be attributed to increased vehicle sales during the summer months, as people gear up for vacations and other seasonal activities. However, the seasonality pattern for 2023 was significantly disrupted, affecting Q3 numbers. This disruption led to a slight drop in overall production compared to Q1 and a much lower production compared to Q2. The decline in production can be attributed to planned downtimes for factory upgrades. These upgrades took longer than expected, extending 1 week beyond previous upgrades, which negatively impacted Tesla's total production, resulting in 430,000 vehicles produced, a 10% decrease from the previous quarter. It's crucial for investors to note that despite the quarter-over-quarter decline, Tesla still achieved an impressive 18% increase year-over-year compared to the previous year's Q3 results. This indicates a continued upward trajectory, although deliveries were also affected, with Tesla reporting approximately 435,000 total deliveries for the quarter, a 7% decline quarter-over-quarter. There was still a substantial 27% increase year-over-year. Considering the circumstances, this performance is commendable, especially given the extended downtime for upgrades. Moving on to sales metrics and revenue, Tesla's total sales amounted to $23.35 billion, showing a 6% decrease quarter-over-quarter, but a noteworthy 9% increase year-over-year. While the quarter-over-quarter dip may be causing concern, it's crucial to view this in the broader context, as it still represents a substantial 9% increase year-over-year. Indeed, despite falling slightly short of Wall Street's revenue estimates, Tesla is still experiencing substantial revenue growth. The automotive segment contributed $19.63 billion, marking an 8% decrease quarter-over-quarter. In contrast, the energy generation and storage segment saw revenue of $1.56 billion, a notable 3% increase from the previous quarter and an impressive 40% surge year-over-year. These accomplishments in the energy segments deserve more recognition, as they exceeded both quarter-over-quarter and year-over-year expectations. It's important to note that Tesla's decision to reduce vehicle prices and increased operating expenses, driven by projects like the Cybertruck and AI research, as well as production-related costs and negative foreign exchange impacts, have impacted revenues and margins. While these short-term challenges are apparent, the long-term potential of projects like the Cybertruck and AI research should not be overlooked. The upcoming Cybertruck delivery event on November 30th is a significant catalyst that could potentially boost Tesla's share price. Despite challenges faced during the quarter, Tesla remains on track to achieve their delivery target of approximately 1.8 million vehicles for the full year of 2023. Regarding recent reactions from investors and analysts, it's crucial to consider the year-over-year metrics alongside quarter-over-quarter performance. While some may be fixated on the 37% drop in earnings per share and the decline in gross profit margins and regulatory credits, it's important to remember that these are near-term fluctuations. Notably, analysts from Bank of America, Canaccord, and Goldman Sachs have revised their price targets downward, contributing to a 6-8% decrease in Tesla's share price. However, analysts like Dan Ives and Adam Jonas, while lowering their price targets, still remain bullish on Tesla's long-term potential. One particularly positive development is BMW's adoption of Tesla's North American charging standard for their electric vehicles starting in 2025. This signifies a significant win for Tesla in the charging network competition, as BMW users will now be able to access Tesla's supercharging stations without the need for an adapter. This agreement not only solidifies Tesla's position as the default charging network, but also brings additional revenue into Tesla's pockets. Taking all of these factors into consideration, the recent dip in Tesla's share price might present a strategic buying opportunity for investors. Despite short-term challenges, Tesla's trajectory appears promising, with potential for significant growth over the next 12 months. In the author's view, a target of around $290 within that time frame seems achievable. And that's it. We hope you enjoyed this video. Don't forget to hit like and subscribe to our channel for more updates. Thank you for joining us in this video, and we hope to see you in the next one. Happy investing!